Hello, trading is closed on the 24th of January, 2022. This will probably go down as a very historic trading day. But before we talk about it, let's do our disclaimer. It's my trading plan for tomorrow, the 25th. It's my plan. I can be wrong. Remember that, and any trade you make should be at your own risk. Call after Friday's close was I thought we were near a low in terms of time, but not necessarily in terms of price. Here's what we said. Another one of my delightful understatements. Look for the pattern with the early low. This is it. Tomorrow has the early high. We always are thrilled to cross another long-standing MEJT target off the list, 43.45.29. Note there was resistance here, right at the price, resistance here, right at the price, and finally we broke through. That's a stilt. That's a stilt. This is a diamond. This is an inverted diamond on stilts. We are right at the origin of the left stilt. That's resistance. Resistance doesn't have to hold, but what usually happens, not every time, is that the first challenge holds and the second challenge breaks through, if there is one, breaks through in grand style. Nothing stops us from gapping over this or even trading through it, but it's just a common point of resistance. Next common point of support is this green line, 42.33.93. That was an old FOMC announcement price, and we've now printed all of last year's MEJT targets back to the 42.14.73 number we had from June 21st. So in really under 3 weeks, we erased essentially all the gains we had from June till early this year, a period of over 7 months. In the morning, MEJT gave an ultimate buy signal. We didn't have to get more than this, but often you do. Said this drop wouldn't stick, it retraced. Had this big rally, said it wouldn't stick, it retraced. And then off to the races. This is the daily chart. This line and this line are Tom DeMark's TDST lines. These are support levels, and support goes to one bar under the price. This was the TDST line from this 913 move. Just went right through it, but it was still within support. That's a bar under the line. We had a 913.9 pattern last spring and summer, and it started from 42.17.23, that support. It's really very hard, even when the market's in free fall, for it to go through more than one of these lines when they're so far apart. They are support. Next line's down here at 38.53.5. Here's the futures. We had a big E-mini volume spikes, over 3.5 million contracts. These things don't have to mark the exact low, but often they occur pretty close to the low. It was also by a large margin the bar with the biggest range. Often that occurs on the day the market hits a low. So we have a number of indicators compatible with this low holding, at least over the short term. Gap down, lower low, closed over all the highs. That's a bullish pattern, so unless we gap down smartly, we should see higher prices tomorrow. But gapping down smartly is not impossible. Futures are down as I'm writing this. This is resistance. And this price is a Fibonacci target of this pattern. So we did rally to resistance, but not through it. And usually what happens is you either gap over this, or at least for a day or so, the resistance wins. I can't really be confident of my count here, but if we're in wave black 3, I can count 1, 2, 3. This is a fourth wave of some kind. And if that's the right count, before we overlap this business, we should have a fifth wave down, which will most likely truncate, because when you have a strong impulsive third, the fifth wave often will truncate. So this could be the low, but there should be often one more wave down with support around this level, which is 43.45. Now that's not carved in stone. We can gap up tomorrow and kill the whole thing. But one leg down would complete the wave count for me. Doesn't mean it's the right count. Tomorrow's pattern has the early high. We could still gap down. Typically it's a rally day with a final hour high. Failure is a straight line drop. We gap down, hit a lower low, closed over intraday lows and even the highs. Unless we gap down smartly, we should see higher prices tomorrow regardless of how we close. There were a number of signs of a market bottom today, had the biggest volume of the decline and the greatest range. NASDAQ McClellan oscillator reversed through its Bollinger Band. That gives a buy signal too. Strong as the rally was, it couldn't clear Friday's last relative high. So far, we've just got backing and filling from the gap down. The high of the day is a fib target of a prior consolidation. Wave count, if it's right, argues for one more leg down, possibly, no guarantee, a truncated fifth down to about 23.45. The high of day met resistance at the origin of the left stilt to the inverted diamond on stilts. Futures are down quite a bit as I write this, so one more wave down can't be ruled out, even though I think that today we did hit a very short-term low. Eventually, I think this low is going to break. But for a while, at least, I think we're going to trend higher. Don't forget, we have 3 higher MEJT targets. So tomorrow has the early high. We'd like to see one more wave down, but we think this low is going to hold for a while. And if we gap up, we just forget about that move down for right now. Probably have to come up with some other count. And that is today's call.